I did get to talk to David Tepper at length last night, and he more or less initiated the conversation based on the market action that we saw on Friday. On the lows, he described his stance on the markets as there's an aviation term where you push the throttle all the way to the wall, and there's these little knobs, if you will, on each side of the aviation throttle, and the knobs go to the wall. But we're not really going to say that for some reason. Fine with me. But he said on the lows on Friday, he actually pushed it through the wall. Now, he got bullish for a very specific reason, and it gets a little bit arcane. But, you know, Tepper is a guy that he'll go with the crowd when he needs to, but he can also be very contrarian. And this is a contrarian call based on what happened in Japan on Friday. Kind of interesting, but the yields in Japan fell after the Bank of Japan's governor, Haruhiko Kuroda, didn't say that they were going to widen the band on the Japanese government bonds on the 10-year. David's point is that for 5 years, more than 5 years, the Japanese have been net sellers of U.S. Treasuries. Finally, at this point, at 1.6% on our 10-year, they are now likely to be buyers because they can make a nice profit based on how cheap U.S. 10-year Treasuries are compared to Japanese 10-year and 30-year. And you might not seem that way because the rates are lower, but it has to do with currency hedged positions that you take. It's now, those have collapsed, the costs of those. So now you can make about a half of a point more on our Treasury. So his viewpoint is that takes a major risk off the table, and it's very difficult to be bearish right now. His basic thesis is that we are at the high end of the range, at least for several months, on the 10-year. And maybe the new range is 1.3 to maybe 1.7, but he expects it to be much more stable now, the 10-year. And that flies in the face of everything you guys have been talking about today, you know, hearing about 3% 10 years. Now, he did want to emphasize something, and this I actually got this morning because it's very arcane when you look at what we're talking about in Japan and how, you know, the currency hedging and all that stuff. He says, basically, I think rates have temporarily made the most of the move and should be more stable in the next few months, which makes it safer to be in stocks for now. Not necessarily a long-term predictor on where rates are 6 months, a year out. But at this point, a lot of what, you know, the market has given it agita is that the rates have been moving up and moving quickly. He thinks that we're near the high end, at least for the next several months. Now, he combined all this with the stimulus package. He says you got a possibility of stable rates with 1.9 trillion is going to be passed this week. And the combination of those two things could be very bullish for stocks. So now, in terms of the knobs to the wall and through the wall and all that that expression, he was more at the lows on Friday, if you saw the NASDAQ. That's, I think, where he got really bullish and was acting on his bullish intentions. He also made some interesting comments on some of the bellwethers like Amazon, that Amazon now at 25 to 30 times, whenever it's been here, and it's fallen quite a bit from where it had been, that is a cheap, it's not expensive at this point. And that's something that he thinks permanent changes have been made, and where we're ever going to buy T-shirts. You're probably never going to go to a store to buy a T-shirt if you can just order it online. And there's a lot of permanent changes that have been made. So Amazon looks pretty good to him. So that's what we have. I saw a little bit of the show earlier, and I did see a lot of people talking about, you know, the market is teetering on a real problem based on whether rates continue to go up. So this kind of flies in the face of that. And I'll be interested what you guys think, and I'll be interested to talk to Mohammed about it, because, you know, he's a global, a watcher of all things global. And it was really a shock in Japan. I mean, the quote was that Kuroda stunned market participants by not widening this band. They have the yield control that they do over there at zero, and the band now is 40 basis points. And they were widely expected on Friday to raise that range, which would have made, you know, they're dealing with the same thing we're dealing with. They want to keep the economy going. They don't want to stifle it. But there is upward pressure on rates, and that was a surprise on Friday, and that was fully the reason for Tepper to get bullish.
Shepard Smith here. Thanks for watching CNBC on YouTube.